Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Brian London, editor of the Gold Newsletter, also our host down at the New Orleans Investment Conference happening in November this year. Brian, let's, as we usually do, focus on the precious metals stocks and metals stocks broadly. I want to get your 2024 outlook, understanding here that the metals stocks, especially the juniors, were under pressure most of the year. However, you can make an argument that they are still largely range bound, except for some of the really small ones that unfortunately broke down last year at some point. But at the end of the year, depending on what stock you look at, you either go back to the beginning of October or at least in November through December, the stocks ended on a more positive note. There are a number of sectors that ended on a positive note. What's your outlook for 2024 then? What are some of your main focuses?
Well, Corey, I'm bullish on 2024. I think the fundamentals will support gold. We're finally getting to that point, the downside of the cycle where rates will be cut by the Fed for a number of reasons. They will have to cut rates. The question now is, will it be, say, 3 times that the Fed itself thinks is likely, or will it be 5 or 6 times that the markets think are likely? So we're in a good place when that's all we're arguing about. So gold will benefit, really everything, every risk asset will benefit from the Fed cutting rates this year. Just the timing and degree, it remains in question. So that fundamentally is going to be the big help for gold and silver. What we need to do in gold right now is get over $2,100. We set 2 all-time records over the past month or so in gold, but they were barely records, only about $10 higher than the previous highs. So the market really and investors really are not going to look at that as anything but yet another top, this one being a quadruple top in gold, unless we decisively beat those old records. And that 2100 level is kind of the level. Everybody looks at that, and I think rightfully so, as being the next big hurdle to get over, and what we need to get over to prove that this is not just another failed rally for gold. Once we get over $2,100, we are literally in uncharted territory, and we have a macro picture, a fundamental background that would be tremendously supportive for much higher gold prices. That's what we need to get the mining stocks started. We need to get the generalist investors getting into the sector and getting excited about it. And we're not that far away. We've gotten into the new year after a nice year-end rally. We've gotten the new year and we've shed some of those gains, but we're still very close to that $2,100 level, and it would just take a few words from some Fed official to get us over that hump. So I'm positive generally on the gold market long term and short term. I think we're going to get over that $2,100 hump.
Brian, what about looking at other markets here where, again, it seems like a lot of sectors are moving in tandem with each other? It was a rally in almost everything at the end of the year. And sometimes we do hear from the precious metals community that we need a crashing market to draw those generalists into the precious metals. What's your thought on this outlook and if it'll happen this year?
Yeah, I know a lot of people and some people I really respect in the industry feel that gold really can't take off unless we have a significant downturn in the equity markets. I don't agree with that because everything is driven by central bank liquidity, and the Fed leads the pack of central banks. So it really boils down to Fed monetary policy, and that floats all markets together. So I think that it's more likely than not that equities will rise along with gold and commodities, et cetera, and they'll all rise on the sea of rising central bank liquidity, and that's what we're going to see, and that's what we need to see. Right now, we have seen an interesting development or a factor in the metals markets, and that's the fact that there's tremendous central bank buying of gold, obviously not the Fed, but other central banks. And I think it's largely coming from Asia. We had that nice rally over the holidays where just about everybody was absent from the markets and not involved, especially Western investors. Yet we still had strong buying and strong upward pressure on the gold price. To me, that timing and in combination with the fact that GLD, the primary gold ETF, was essentially flat during that period as far as tons added to its holdings, that points to Asian investors and it points to Asian official investors, central bank buying. I think that's the kind of buying we're going to continue to see as a backdrop, as a supporting factor for the gold price. And the good news is really that Western investors are still largely uninvolved. So there's tremendous buying fuel still there, still ready to drive the market higher once we get off again above that $2,100 technical hump.
So then, Brian, when it comes to individual stocks, because in all fairness, it still has been a game where you need to be selective. It's not a rising tide lifting all stocks. However, a number of stocks have joined in at the rally at the end of the year. Where is your focus? What do you think are the stocks that are set up best in an environment where there is at least a little more money coming into the sector?
Yeah, I think the ones that are going to move first are the ones that really have tremendous large scale assets and are undervalued at their current price levels, which is really just about all of them. But some ones that pop in mind are Banyan Gold. It's in a great jurisdiction, has a large and growing resource, and is checking off all the technical boxes to de-risk it. I like Cassiar Gold. It's got about 1.5 million ounces of resource and a tremendous land position, and is adding to that resource. What else is out there? Heliostar Metals is one that's performed fairly well toward the end of last year, but has come back a bit from those and from those higher levels, and is a tremendous value right now. They have a large, very high grade asset that I think is going to prove to show the market in short order tremendous economics, and that one is due for a re-rating. So, this market is replete with value right now, and it really is a target-rich environment. But those are three that I think kind of stand out among the pack.
So does that mean you are, at least right now, in a way, avoiding some of the earlier stage exploration plays or pre-discovery or even early discovery plays?
Well, in that respect, you have to look for companies that have cash because that's really tough to find these days. And it really is a market of the haves and the have-nots in that regard. So the earlier stage companies have, by definition, not found something that really draws cash into or draws money from the speculative sector. So generally speaking, it's even riskier right now. That said, there are some companies out there that are exploration level that have some good backing. One in our portfolio, Sendero Resources, has doubled really since we recommended it in November. And that's one that I think has a tremendous opportunity to duplicate some of the big, large-scale copper gold discovery stories out there like Filo.
So then what about jurisdictional risk? Because what I'm seeing here from Banyan, Cassiar, Heliostar, a bit better known jurisdictions. Does that need to be the focus still, where everything seems to, again, still be underperforming where the gold price is? So don't bother going into some of the tier 2, tier 3 jurisdictions?
Yeah, you don't need to find value. You can stay in the better jurisdictions to find that value. It is always a spectrum, though. You can get into some of these lower tier jurisdictions if the asset justifies it, and a company can do very well in some of these more frontier jurisdictions if they have a tremendous deposit. Aya Gold and Silver is an example of that, with perhaps the leading silver asset in the world today in Morocco, where you don't see a whole lot of companies exploring or developing right now.
So, Brian, you mentioned just how important cash is, but we did see a little bit of a financing window open up at the tail end of the year. That is normal, especially for companies that can raise flow through money. But look, you're right. There's still a number of companies that are very much watching their cash in the bank, and rightfully so, because it hasn't been easy to raise money. Have you noticed any glimmers of hope when it comes to financing for especially the smaller companies, but almost all companies across the board?
Not as yet, but that's going to happen. This is the time of year when companies are starting to get ready for their big financing push. They want to get all their ducks in a row and be able to show investors a good plan for building value throughout the year. They want to be able to show investors that going into the PDAC conference in March. So the next month or two will be critical for companies to establish that foundation and develop a really good story that they can sell in February and March. So yeah, I expect the news wires to start humming. They have yet to do it in the first few days here of the new year, but I expect that to happen fairly soon.
All right, Brian, not much more for us to talk about here other than, look, we ended the year on a more positive note, and we just need a little bit more carryover because, yeah, a lot of these stocks are still, in a way, watching their finances and, in a way, also handcuffed in terms of what work they can do. So focus on those companies that have resources, have assets, and still have work programs that they can undertake, kind of similar to last year, but again, in a slightly better environment, too. So, Brian, thank you very much for your time. We'll chat again in another couple weeks, and I will be seeing you in Vancouver for all the conferences coming up. I very much look forward to that. Thank you for your time today, Brian. Have a great rest of your week.
Thank you, Corey. You too.